What's up, YouTube? My name is Ty, financial advisor. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is TBLT, Toughbuilt Industries. This finishes at $7.09 today. That is up 20.99%. So we've been covering this stock for the past few weeks. This did go above $9 a few days ago, and I did say it was probably time to take profits and maybe even short it, and then it did pull back below 4. So today this did make StockTwits top 10 once again. I believe it had over 4,000 mentions, and I believe this was number 3 after SPY and Amazon. So once again, we're going to analyze this. And there is a reason as to why this stock has been squeezing again the past 2 days. We did have some very bullish news coming out yesterday. So let's check that out. Shares are trading higher after the company entered into an agreement with Ace Hardware USA to sell 35 products across 5,500 stores. So that was really bullish news. The market really liked it, jumped in here, started squeezing the stock again, and the momentum continued into today. So major gain yesterday and major gain today. And it appears like the squeeze is still on. All right, so let's jump right in. Let's go ahead and analyze here. So first of all, this appears to be a cup and handle in the making. Bottom of the cup being the low of 134. And there can be multiple possible tops. It can be 955, 1325, 2030, or 4160. And longer term, this is part of an even bigger cup and handle, where this has the potential to go all the way back up to 105. Although I personally believe the most realistic top would be 955 or 1325. But those are all bullish indicators. That is telling us that the stock should come back up to one of those tops to complete the cup. And then we have a triple gap down. First gap down is back here at 99.70. So that's a bullish indicator. That is telling us that the stock should come back up to 99.70 to fill this gap. Second gap down is back here at 75.90, so another bullish indicator. That is telling us that the stock should come back up to 75.90 to fill this gap. And third gap down is back here at 24.80. So another bullish indicator that is telling us that the stock should come back up to 24.80 to fill this gap. And those may take a while to fill, but eventually in the longer term they should. And now on to the bearish stuff. We also have a triple gap up. First gap up is at 525, so that's a bearish indicator. That is telling us that the stock should come back down to 525 to fill that gap. Second gap up is at 320, so another bearish indicator. That is telling us that the stock should come back down to 320 to fill this gap. And third gap up is back at 240, so another bearish indicator. That is telling us that the stock should come back down to 240 to fill this gap. And those gaps should fill in the short term. In the aftermarket here, this is pulling back down to $7. So if this aftermarket action holds, that would be a bearish indicator for Monday. That is suggesting that Monday the stock will sell off. Here we have a very large bear flag developing. Here's the flag pole, and here's the flag. So that's a bearish indicator. That is telling us that the stock may break out to the downside. And here we do have a symmetrical triangle forming. Right now, this is consolidating between 840 and 460. So there's a bit more consolidation to go, but this should consolidate somewhere around 650. And from there, it should break out either way, to the upside or the downside. So the symmetrical triangle is currently a neutral indicator. And if you guys want to follow along, the link to the chart is in the description down below. So right now, this is trading between the sideways channel, the rectangle of 735 and 675. So if this goes to the upside, next levels of resistance would be 735, 770, 845, 895, 955, 1025, 1115, 1210, 1325, 1470, 1610, 2030, 2110, 2240, 2380, and then 25. There is resistance above 25, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be $675, $6, $515, $475, $430, $380, $335, $285, $240, $210, $180, and then the low of $135. $135 is the all-time low, so no support below that. That would be uncharted territory. So right now with the current price, $7.09, the channels to the upside and the downside are very wide, so expect significant price action either way this goes. However, if/when this breaks $5.15 to the downside, the channel starts to narrow, so expect a significant decrease in price action if/when this breaks $5.15 to the downside. RSI is currently at 63, so not quite overbought and overvalued, but quickly approaching that, so be careful guys. According to the RSI, the current price of $7.09 should be lower, and this did 79 million in volume today, which is tied for the third biggest volume day of the year. So very significant volume, definitely still gamma squeezing here, so this pump/squeeze today was confirmed by the volume. Okay, guys, just my opinion, not financial advice. So it did appear like the squeeze was winding down and coming to an end. But yeah, all it takes is some good PR, and the stock is squeezing again. So in the long term, the stock still looks really bullish. Again, we have strong bullish indicators in the cup and handle and triple gap down. In the short term, this may have a little bit more upside potential because this is still squeezing. But as with every short squeeze, it'll have to come crashing down, just a matter of when, not if. Again, we have some pretty strong bearish indicators in the triple gap up, bear flag, and high RSI. So be careful, guys. It's pretty much a game of hot potato at this point. Someone's going to get caught holding the bag. Make sure it's not you. So therefore, if you want to go long, not financial advice, I would not do that, and I would not recommend that. It is possible to make some money here on the upside still, because again, this is still squeezing, but you missed a lot of upside already in the past 2 days, and it's getting very dangerous at this point. I think going long would be FOMO. So the current price of 709 is really not a good entry. It's not terrible, but it's definitely a below average entry here. I guess if you're going to buy and hold for the long term, it's not such a bad entry, because again, this should eventually come back up to 99.70 to fill the gap there. And from the current price of 709, that would be over a 1300% upside potential. So still massive upside potential here in the long term, even with this below average entry of 709. And again, this should come back down to 240 in the shorter term to fill the gap there. So from the current price of 709 down to 240, that would be over a 65% downside potential. So also massive downside potential here. So I would say going long at the current price, 709 would be a high risk, very high reward play. Not really worth it, in my opinion. Again, in the longer term, it's not such a bad entry. But honestly, if you're a little patient here, you should be able to get this back at 240 where the gap is. And from 240 up to 99.70, that would be over a 4,050% upside potential. There's some very critical support below that, near the all-time low. So yeah, really shouldn't go too much lower, below 240. So I would say going long at 240 would be a low risk, very high reward play, and that is definitely worth a shot in my opinion. So I don't like the current entry of 709, but I can support going long at 240, and if it pulls back, then you can just average down at the supports that I mentioned before. Now, if you want to go short, not financial advice, seems like a pretty good play to me. It's not really an excellent entry at the current price of 709, but definitely an above average entry here on the short side. And yeah, it appears like in the short term here, there's going to be some pretty significant pullback. So I would say in the short term, at most, this comes back up to 2030 to complete the cup there. And even that is pretty unlikely. Realistically, I don't think this is going to go past 1325. So this is still squeezing, and there may be a little bit more upside to go, but I really don't think it's going to go too much further to the upside. And again, this should come back down to 240 to fill the gap, which would be over a 65% downside potential. So I would say going short here at the current price, 709, would be a medium risk, high reward play. And that's worth a shot in my opinion. I say medium risk because, again, this is still short squeezing. This is still a retail favorite. Apes are in here. So anything can happen. This stock can continue to go moving to the upside. Although, again, I do think that is pretty unlikely. And I say high reward play because, again, there's over a 65% downside potential here. So as long as you're able to withstand some upside pressure here, you should be able to make at least 65% to the downside relatively easily. So I can support going short at the current price 709 and higher. And again, I would cover at 240 where the gap is. All right, so pretty straightforward, guys. So the stock was squeezing, pulled back pretty significantly from 950 to below 4. And then we get this great PR yesterday, and the stock goes squeezing again. So longer term, the stock still looks really bullish. A lot of upside potential here in the longer term, and this is still short squeezing. So in the short term, this may have a bit more upside to go, but sooner or later, the squeeze will have to come to an end and come crashing down. So long term looks bullish, short term looks bearish. So therefore, if you want to go long, not financial advice, the current entry of 709 is really not a good entry. Longer term, it's not so bad, but there's a good chance this pulls back down to 240 to fill the gap there. So I don't like the current entry of 709, but I can support going long at 240 where the gap is. And if it pulls back, then you can just average down at the supports that I mentioned before. 4,050% upside potential in the longer term there. Not too much downside potential. And you really can't go too wrong there. And if you want to go short, not financial advice, looks like a pretty good play to me right now. Not quite excellent, but above average. Again, the short squeeze will have to come to an end pretty soon, and it's going to come crashing down. It may run to the upside a little bit more, but really shouldn't go too much higher. Again, this should fill the gap at 240. So as long as you're able to withstand some upside pressure here, you should be able to make over 65% to the downside pretty easily. So I can support going short at the current price, 709 and higher. And again, I would cover at 240 where the gap is. So congratulations to everyone who made money in the stock today. Consider taking profits if you're up, not financial advice. And good luck to everyone currently in the stock and to everyone looking to take a position. This is TBLT, Toughbuilt Industries. Thanks everyone for watching today. I appreciate you guys. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty, This is Smarter Gambling. See you guys on Monday. Have a great weekend, everybody. Peace out.